In this video, if you have just a little bit of patience and you can actually be able to wait 6 months, you can be able to get funded $100,000, literally, even if you have no credit whatsoever. And I'm really going to go ahead and break it down for you in this video right away. Trust me, guys, I've done this for myself. I've also done this for clients. All it really takes is to be able to have 6 months of patience and to be able to build up your credit report properly. All it really takes is to have 6 months of patience and also to be able to build up your credit report properly to make it so sexy that underwriters will love to go ahead and approve your application. And if you guys give me less than 20 minutes, I'll go ahead and explain exactly how to be able to accomplish this. So let's get into it. What's popping, guys? Your boy All Boo. I'm back here with a banger. So if you haven't done so already, go ahead and make sure to subscribe. Your boy's on the road to 10K, so we're going to get to 10K subscribers as soon as possible. So definitely go ahead and make sure to subscribe. Now, really what I want to talk about today is I hear a lot of people whenever they come to me and they ask me, hey, Abu, so basically if I have a brand new season credit profile, right? I don't have any type of accounts. You're basically brand new. You're starting off. Even with my cousin, right? My cousin just turned 18. So we're actually working on fixing his credit right away. So really, this is exactly what I would tell him, right? Is to go ahead and actually build up your credit report properly so you guys can be able to go ahead and add the right accounts on there. And lenders will love to see that you actually took the time to go ahead and actually build out a strong credit profile. Rather than not being strategic and just running all over the place, you want to make sure you know exactly what you're doing. Because having a structured profile is really going to get you guys those high limits that you really want. So even if you have a brand new credit report, because really what it is a diamond in the rough, right? It's really gold at the end of the day. Because you can go ahead and actually build it up the way you want to. You can be able to go ahead and add the right accounts that you want to. And that way you guys can be able to go ahead and get the highest limits possible. So really right here you see is that you got $100,000 personal credit profile. So you see right here in this picture, there's somebody that's broke, they're miserable, they don't necessarily have any type of credit or anything that's going on. And so usually a lot of times it just leads into you actually working, trying to save up money and never really getting ahead, right? And so credit is really the ultimate factor because of the fact that it helps you be able to go ahead and actually leverage your lifestyle, right? It helps you be able to go ahead and actually leverage the real benefit of credit, right? It allows you to be able to get access to capital. Now, what you actually do with that capital is really, really important. That's what separates the people that end up staying broke for the rest of their life or the people that actually go ahead and leverage it. Because the last thing you want to do is go ahead and actually get this credit and spend it on a bunch of materialistic stuff rather than actually going ahead and actually spending it for your businesses, buying land, buying properties. These are the things that you want to go ahead and do because once you actually build out these assets and you build it out properly, then those assets actually start to take care of you. How I look at it, right, is that you want to go ahead and sacrifice instant gratification to be able to go ahead and actually build a money-making machine. A lot of people say that money doesn't grow on trees, but I'd actually beg to differ because if you actually have the patience in order to be able to go ahead and plant seeds and actually harvest a money tree, then you guys can be able to go ahead and actually get money. Then you guys can actually be able to print money anytime that you want because you literally are taking the time to go ahead and actually build out a money-making system. And so that way you actually disconnect your time from you actually earning money. So this picture right here just definitely represents that as far as somebody that doesn't, they're down and out, they're bad on their luck, right? And they don't necessarily have any access to capital. They don't know where to go and they're stuck trading their time for money. Now, if you actually have the patience to go ahead and actually wait 6 months, you can be like this guy right here. You know what I mean? Like at the end of the day, I definitely said don't buy the materialistic stuff, but I thought it was a really cool picture, right? Just somebody who's stressed out, bossed up. You feel me? Like he just literally got the nice car, got everything situated and all that, right? And so he's just looking like success, right? And so at the end of the day, I like this picture because of the fact it represents somebody that it literally bossed up, right, and literally took control of his life. And so that's exactly what you can do with credit, right? So I really want to talk about what a seasoned profile is, right? Now, a lot of times when people actually build out their profiles, it has to be very, very strategic, right? Last thing you want to do with credit is play chess. So your credit report is literally your adult report card. Your credit profile is literally your adult report card. Whether you like it or not, lenders, insurance companies, banks, anybody that's really trying to go ahead and actually lend you a credit or make a financial decision on your behalf is going to go ahead and use your credit in order to be able to determine it. And they don't necessarily know you from a can of paint. So what they actually go based off of is your actual credit and also your payment history. They're going to look at your credit report and they're going to make all these analyzations and all these deductions based off of exactly what they see on your credit report. So if they see a bunch of charge-offs, a bunch of late payments, they don't necessarily take you serious because they realize if you can't manage your current relationships, then that's going to be a sign, that's going to be a behavioral sign. That's going to be a sign to them that you won't manage any of the new accounts that they even give you. So they're not going to go ahead and give you any type of accounts. So that's why credit is really, really important. Whether you like it or not, it's super important. Even if you have $1 million of cash that you just found in a suitcase, they literally won't even accept it because no mortgage company, no bank is ever going to accept it unless they know exactly where that money's coming from. So that's why credit is really, really important, because with credit, you're actually able to borrow money from the actual banking system. So a season profile, right? What you really want to have for a season profile is that, now, of course, season is going to be relative, right? But what I mean is a credit profile that's not a thin file. So a thin credit file, right? If you have anything under 5 accounts, right, that's not going to really help you out at all. A lot of times, even if you apply, you often get hit with limited credit experience. So that's exactly what you really want to avoid. As far as being able to go ahead and have a season profile, what you really want to have is at least 5 trade lines on your credit report. Now, a trade line on your credit report is simply put, it's just a relationship with the bank, a lender, whoever actually gave you credit. That's actually considered a trade line, right? So that's why you need to have at least 5 trade lines. That's exactly why, but it's really important on how you actually structure these trade lines, because you don't necessarily want all credit cards. You don't want all loans. You want to be able to have a mixture of both. So if I really had to go ahead and actually get $100,000 in 6 months, here's exactly how I structure my profile. And so as far as the credit builder accounts, right, I actually talked about this in my last video. So if you haven't actually watched that, go ahead and click on it right now and make sure you go ahead and tap into that. And so with credit builder accounts, of course, you want to add too many credit builder accounts. You really want to be able to utilize this as a bridge to get more credit. So really what you want to do, right, is first, you want to go ahead and get you a self-lender account. Now, it doesn't have any type of hard inquiries. Self is really good because of the fact that it allows you to be able to go ahead and get an installment loan. That's honestly what I'd recommend. Don't get the secured cards. Don't get any of those installment revolving cards that they have, like the Self Visa. You don't need that shit. So really what you want to do, right, is you want to go ahead and actually get a self-lender account. That's going to be $1,000 installment account. And all you really have to do, right, is go ahead and actually make one payment every single month. If you, about $48 if you have it spread out over a 36-month span. So that's really going to help you guys out with your payment history. And also, and since it's a secured account, you don't have to come out of pocket at all. You'll actually get the money back right after that. Now, afterwards, really what you want to do, right, is you want to go ahead and get you. So another account that I'd highly recommend you get is, now we're going to go ahead and get a Credit Strong account. Honestly, I would go for the Magnum or the Build and Save. Now, just like the self-lender, this one has no hard inquiry. So you're not wasting a hard inquiry on any of these credit builder accounts whatsoever. So that's going to be really beneficial. Now, honestly, what I would recommend, right, is for you guys to get the highest limits possible on these. So even Credit Strong, they have a $2,500 limit, they have a $5,000 limit, and they also have a $10,000 limit. I'd honestly go for the 5,000 or 10,000, because the more you have on your credit report, the more lenders will actually approve you in the long run, whether it's credit cards, loans, whatever. As long as you actually have more on your credit report, the more debt you actually have on your credit report, the more debt they'll actually extend you. It sounds crazy, but it's true. Now, the next account I'll add is going to be a Kickoff account, right? So Kickoff actually does have some good revolving cards. So it doesn't have a hard inquiry. And actually, you can be able to get a $3,500 limit revolving card on your actual credit report. So that's going to be really good as far as being able to get approved for higher limits off the bat. The last thing you want to do is get approved for $500 limits. You don't want that shit at all, because it's literally going to take you guys years in order to be able to get to $2,000, $5,000, $3,000 credit cards. So you want to really start on the right foot, because you don't want to set yourself back. Now, the next account that I would really add is going to be Rental Karma. Now, Rental Karma is going to be crucial. It's going to be crucial because they actually have an option where you can actually backdate it, so up to 24 months. So let's say, for example, that you actually have lived there. Now, what Rental Karma will actually do is backdate that 24 months of positive payment history. So they'll give you up to 2 years of positive payment history. So this is going to be tremendous for your age. Now, one thing I would do with Rental Karma, right, is to go ahead and actually have that open date or the date you moved in as far as possible. If you can have it for 10 years, if you can have it for 5 years, that's even better, because then that's going to actually show up as the account open date on your actual credit report. So the longer you actually have that account, the better off you'll be, especially with your credit age. Now, after we went ahead and added these credit builder accounts, really what we need to do is add these revolving accounts, right? So we really want to have at least 3 revolving accounts. Now, like I mentioned, right, a credit builder accounts, we've had Kickoff, and then we also could add a couple of ones from Credit Strong. A couple of others that I would really add, right, is going to be Ava Finance. And so that's going to be a good one. They're going to give you guys up to $2,500 limits. And it's not going to have, they're literally going to be able to give you guys up to $2,500 revolving limits. And so that's really going to be with Ava Finance. And of course, it's not going to be no hard inquiry. Now, last one I would get is Tomo Card. So Tomo Card literally can give you guys a $5,000, a $10,000 credit card, and it even gives you up to a $30,000 credit card. Now, it's going to be no hard inquiry, just like Ava, just like Credit Strong. It's a credit builder account, but the fact that it has high limits is really going to help you guys out. So whenever you guys go ahead and apply. Now, the installment accounts, these are going to be the shared secured loans. These are super, super crucial. Like every single one of, I remember when I first started off my journey, right? My mentor literally had an 850 credit score and he literally just showed it to me. And all he had, right, was literally $50,000, $25,000 secure loans. All of the accounts that he had were literally secure loans, and they're all for Navy Federal. So it doesn't necessarily matter which bank you go to. Now, there's a specific reason I actually put that you can go to multiple different credit unions, but that's for a specific reason. But the fact is, right, is that pledge loans or secured loans, they are literally the best way you guys can be able to go ahead and actually control your credit report, because it actually allows lenders to see that you've actually been able to manage really high limits of credit. And also lenders love to see, even though credit builder accounts are great, lenders love to see that it's coming from a credit union or even a bank. So whenever you actually go ahead and put up your money, even though it's your own money, right, it's going to show the lender that you did a secure loan with on your actual credit report. So that's going to help you guys out a lot more. So whenever these secure loans get reported onto your credit report, lenders and the credit bureaus, so they don't know if you put up the capital or you actually approved for that. So that's why they actually helps you out, because a lot of times whenever another lender is looking at it, you got to approve for a $20,000 loan on his credit, and he ended up paying it off in less than 6 months. Wow, that's really sexy. Let me go ahead and approve him. That's really exactly how lenders are looking at it whenever you actually have these secured loans. I made sure to mention this, right, is that you want to be able to have at least 2 or more from each of these credit unions. The reason I've mentioned 3 different credit unions is because you want to go and actually establish relationships with all of these. Because a lot of times, right, the biggest secret in banking is relationship banking. So whenever you actually put up money or put up capital and you also get more and more products from a single bank, they're going to be able to be more incentivized to give you more and more money. So that's why we want to go and establish a relationship not only with Navy, not only with PenFed, not only with DCU, but all 3 of them, right? There's so many different banks out here. You don't want to go and have all your eggs in one basket. At the end of the day, you want to be able to allow these banks to go ahead and compete, to go ahead and lend you money. Because at the end of the day, that's really what it boils down to. Now, really what I mentioned right here is that you want to have at least 2 or more secure loans from each of these single credit unions. You want to have 2 or more from Navy Federal, 2 or more from DCU, and 2 or more from PenFed as well. So that's really going to help you guys out. And they have to be at least, and this is the most important thing, it have to be at least $1,000. $500, $750, it's not cutting it. It have to be at least $1,000. And I honestly want to do 2 of them. So if you can go ahead and actually get $2,000, let's say, for example, I'd put up a $2,000 secured loan. I also put up a $1,000 secured loan at the same exact time. And at the end of the day, guys, you're not going to be at loss for this money. The thing that I love about how these credit unions do these secure loans is that they actually don't hold your money. And what they'll do is credit that money you just gave them back to your savings account. You literally can pay off that $1,000 from the same $1,000 they put into your savings account. It's just going to be held up for about 2 to 3 weeks once you went ahead and paid it. Now, really what I would do right with these secure loans is to go ahead and pay off 99% of the balance right off the bat. Within 48 hours, within 24 hours, literally pay off 99% of the balance within the bat. And the rest of the money, right, it's going to be 1% left. I will literally set up auto payment for 6 months, right? So if it's literally $60 left, I'll set up auto payment for $10 every single month. And that way it can actually be able to go ahead and report a positive payment history every single month for 6 months, because it's going to be crucial, because every underwriter, they're not going to tell you this, but really what they look for is that payment history for them really starts off at about 6 months. So after 6 months of actually managing an account, that's when an underwriter will actually consider it a good account. Now, if they see about 2 months, 1 month, they want to see some longevity, right? They want to see that you've been able to manage this account for a good amount of time. So 6 months is that actual barrier and that cutoff threshold. So after you do this, right, your credit report should definitely be seasoned. And at the end of the day, you have about 3 revolving accounts. You have about 6 different secured loans. You have about 6 different secured loans from 3 different credit unions, right? And then you also have Credit Strong, Rental Karma, and also Self-Lender. So that's another 3 installment loans that you have right there. And again, you haven't had a single hard inquiry. So all your hard inquiries are great. Now, after 6 months, right, this is exactly why I want you to wait 6 months, is because now you've actually let these accounts season and actually age. So now they've actually seen 6 months of positive payment history. And now you can actually go ahead and run your funding sequence. And we're going to go ahead and run the funding sequence based off of the different credit bureaus. So we're going to do 3 from TransUnion. We're going to do 3 from Equifax. And we're also going to do 3 from Experian. So that's going to be a total of 9 banks, only with 3 hard inquiries per bureau. Man, I'm giving you guys too much sauce today. But really what I wanted to show you guys, right, is the TransUnion sequence. So Barclays, starting off, should give you guys at least $5,000. Navy Federal should give you guys at least $20,000 if you play your cards right, and then a line credit union should give you guys anywhere from 5 to 10,000. So right there with the TransUnion play, we literally just got $30,000 of funding, right? Now the experience sequence will literally go to Amex, and then we'll also go to Chase and Bank of America. So really what we want to do, right, with Amex, they should give you guys at least $30,000 with just Amex itself, because you can apply for multiple different cards. Now Chase should give you guys at least $20,000, because think about it. If you apply for 2 credit cards with Chase, they should be able to give you guys at least a $5,000 credit card or a $15,000 credit card. Chase is known to give out big limits, especially if you're starting off with them, because whenever you're first starting off with Chase, and I'll honestly go ahead and apply with Chase right off the bat, because of the fact that they're going to treat you guys a lot better as far as being able to go ahead and get funded. Bank of America, I'll apply for 2 different credit cards, so they should be able to give you guys at least $10,000. So now we actually have Amex at $30,000. So for the TransUnion, we actually had $30,000, right? Now with Experian, we actually have $30,000 from Chase. We have $30,000 from Amex. We also have another $20,000 from Chase, right? So we're already at 50 right there. Another $10,000 for Bank of America. So we're already at 60 right there. And together with just TransUnion and Experian, we're already at 90,000. So the last one we have, right, that pulls from Equifax is going to be Citi, PenFed, and US Bank. So Citi card, they should give you guys at least $5,000. So Citi's pretty conservative. So if you go ahead and build with them, right, they can be able to give you guys a little bit more. Now the next one, right, is going to be PenFed. Now PenFed is known to give out really good limits. So to be honest, they have a couple of different credit cards. So PenFed should give you guys about $10,000. So that's going to give you guys $15,000 right there. Now US Bank, they'll also give you another $5,000. They want to definitely see some history. So they will go ahead and start you off with a $5,000 credit limit. So right there, we have 5,000, 10,000, 5,000. So that's literally $20,000 we just got from Equifax. So we're already at $110,000 in order to be able to go ahead and get funded. So that's really how you guys can take a diamond in the rough with having a blank credit file. Go ahead and actually build it up. Wait 6 months and go ahead and actually get funded $110,000 and literally get funded $110,000. Trying to tell you, man, you definitely got to hop on credit. You definitely got to be able to go ahead and actually make sure that you're paying attention to credit. And the way that we structure it is the reason why they'll be able to give you guys those limits. They see that you have a good mix. They see that you also have great payment history, and you actually have good limits for all of your credit accounts. Now, if you guys found this video helpful, definitely make sure to subscribe. Get your boy to that 10K subscribers as soon as possible. Hardest financial literacy channel out here, man. Nobody's going harder. And like always, I'll see you at the top, my boy.